Hello and welcome to Smartkarma's corporate webinar. I'm Anisha Kundu and I lead the corporate solutions offering at Smartkarma. So this week we are delighted to have with us Southern Alliance, and with us we have the CFO, Mr. Lim Wei Hung, and along with him we have the strategic advisor, Mr. Tan Lee Koon. We will start the webinar with Mr. Lim walking us through a presentation, after which we will have our Smartkarma Insight provider, Angus Mackintosh, engaging with him in a fireside chat. So we will be taking some live Q&A as well. So I'd like our attendees to send your questions in through the Q&A tab that you will see. And during the webinar, I will share some links on how you can contact Southern Alliance, as well as read research from Angus. I now hand it over to Mr. Lim to walk us through his company presentation.
Thank you, Anisha. Good evening. Thanks for coming to this webinar. So my name is Wei Hung, right? I'm the CFO of Southern Alliance. So Anisha. So Southern Alliance is basically incorporated in 2001. So we actually are one of the largest iron ore mining company in Malaysia, and with a capital market cap of 300 million. So we started back in 2008 for our iron ore mine in Pahang, and we have actually produced more than 6.6 million tons. And you can see in the chart there, we have actually shown some activities, stripping activities or mining activities that the company has undertaken over the last two half 2021 and 2022. That actually explains why the intensity of our mining activities. Next. Right, our Pahang mine actually is located in Johor, right? So we, with the expiry of the mining lease expiring in 2024, but of course we are allowed to keep on renew our mining lease, and we still have another 10 more years of mining lease that in the credits for us to utilize. And we still have three explorations, iron ore explorations project, namely Maoke, Ca'ar Baru, Kota Tinggi, in which the explorations are ongoing. And of course, the most interesting one and the most recent one will be the gold exploration project, which is in Tenggara with the area of 17,000 hectares. And we are actually now have started our explorations activities. Next. Right. As a mining company, what is most important thing to us will be our resources, mineral resources, as well as oil reserve. Right. As you can see in this table, we have 6.3 million tons of oil resources reported in 2021, our year end, and with the 4.5 million tons of indicated and 1.8 million tons of inferred resources. So of 4.5 billion tons of resources, we have converted to reserve. Reserve basically is something that you are able to mine with economically and with the profit, right? So we have converted nearly 96% of our indicated resources into reserve. Next. All right. And despite having all those resources and reserve table, more importantly is for us to measure, right, how reliable is your resource and reserve. That is why we need to have a production reconciliation. As you can see, over the period of June 2014 until July 2021, we have in fact mined up to 5.6 million tons of ore from our Pahang mine, against what the model has suggested, 5.26 million tons, meaning says that from the model, it says that, okay, with so much of work that you have done, you should have actually extracted 5.2 million tons of ore. But in fact, from our statistics, we have actually extracted 5.6 million tons. So it is what we call a positive reconciliation. Is a 6.1% over and above of what the model has predicted. So it suggests that this model is reliable model, so we can safely rely on this model. Next. Right, our financial performance. Right, from 2017, we have actually produced and sold iron ore ranging from 50 million in 2017 when the price was so depressed, until more than 350 million in FY 2021. And as you can see in the FY 2022, the first half, we actually recorded lower sales because we have actually carried out a very intensive overburden removal that actually explain why that we actually extract lesser ore, and that translated into lower sales. Next. All right, so this is a bit of histories that the company has gone through over the 5 years period from 2017 until 2021, and also the first half 2022. So as you may aware, that's 2014 until 2018, there was a time that the price was so depressed, and the company actually is not making that good performance. But from 2019 onward, we are on the upward trend, and we are actually making a healthy profit, and also we have accumulated healthy band reserve. Next. Right. So this is what our balance sheets look like, with the strong cash and bank balances and low borrowings. As we can see, is that that net asset also sitting at a healthy level of 361 million. So that is a pretty comfortable positions, considering that mining industry is the one that needs to use their cash very a lot. Next. So this is a bit of our share price. All right, the price actually has peaked to above $1.40 from the offering price of 25 cents, and now is at the level of 70 cents. Next. So the outlook. So of course, iron ore price is a bit volatile on the shorter terms, but what we can see now, despite it has dropped to below $90 at one time in December, but it has rebounded and has been fluctuating between 120 to 160. So it is still pretty much strong, and these levels that definitely is good for the company. Next. All right, the market enablers for iron ore. Of course, as we know, there is still a strong demand from China, as like our iron ore product actually being sold to Chinese steel mill in Malaysia, and they have actually exported back to China. And also at the same time is that the world actually keep on try to stimulate to boost their economy, and that actually also helped to stimulate the demand and also the growth for the demand. And so is the demand from the Southeast Asia as well. Next. All right. So of course, the company doesn't believe in single exposures to one product. And with the announcement back in July 2021, the company has decided to venture into the gold exploration. And with the reasons that the gold price has been very consistently high over the period and is on the upward trend. And again, it is the one of the products that actually even though has also facing the cyclical trend, but is on upward trend. Next. So why are we looking for the gold, right? Because this is in line with the global economic recovery that will also elevate the demand for the gold. And of course, not to mention about the jewelry and also the central bank gold demands. And of course, China is still one of the main pusher for the gold, and we have witnessed 56% increase in their gold consumption. And not to mention also is the investment that into the gold, and which resulted in the in the demands is still remain high from the various market sectors. Next. That I end this presentation. Thank you very much. Angus, back to you.
Yeah, well, thank you very much, Lim. That was a very interesting overview of the company, and you know, some indications as to what's going on in global markets for iron ore. But I might start with that actually, just in terms of the dynamics of which drive the iron ore market globally. I mean, which industries are the biggest consumers? I mean, I guess it's mainly steel, and there are some other drivers I know, but and which markets are the most important? I mean, obviously you've mentioned China already. Is there also demand from other markets globally which is picking up?
Yes, as we can see is that we are not only looking at the steel or the demand for the end product per se, but at the same time is that we have seen that the product arising from the steel industry has been widely used in many countries as because they are keep on investing in the infrastructures project, right, and also in even the development. So as we can see through that. The demand is still very much in place, and as a result of that, the iron ore price for the Fe62 or the Fe content of the 62 has actually increased by 32% in the Q1 to reach $158 in March, right? So that is actually is a good sign that the demand is still there. Otherwise, it will be very depressed.
Yeah. Very good. Why don't we just move on to the company's business itself and talk about your existing mine. And key question obviously is what is the life expectancy of the mine, and how much potential does it have to extend that life? If you give us a little bit more background on that, that'd be great.
Yeah, okay, sure. So if we look back to our annual report or the announcement back in 31st July 2021, so we have actually reported remaining resources, indicated resources of 4.5 million ton, and with inferred resources of 1.8 million ton, right? So why we also included inferred resources in our forecast is because always we have a positive production reconciliation, means says that whatever we have reported in resources, we also have a healthy production from there. So from as explained in our earlier presentation, right, we have actually managed to convert 4.3 million tons of resources to reserve. So based on those figures and statistics, right, and that suggests that we have more than 4 years of reserve that we can capitalize based on the existing mine pit. But of course, and at the same time, don't forget that during the IPO, right, our reserve or mine pit or the design was based on the price of an oil price of $90, right? So that actually because during then there is a forecast of $90, and we can't be aggressive when it comes to our mine pit design. So, but if you were to refer back to our offer doc again, if the price were to hit 110, there will be in additions of 1.4 million tons of reserve that we can add to that. So that is how dynamic that. Of course, with the present iron ore price is way above that. So that actually will be helpful for us to keep on expanding our life of mine. But of course, at the same time, we are not going to rely on the existing resources. And as was announced, that so we have actually the explorations of towards our southeast zone of the existing mine pit actually has discovered an extension. It's about 150 meters strike extensions to the main ore. So that again will add to our resources. Of course, we have to do the due study and the due reporting before we are able to announce to that. So it's to our northwest zone, which we have outlined, the zone of gently dipping hematite mineralization. Right, so this we are waiting for the results to be assay results to be returned back to the company so that we can come up with proper updates to our resources and reserves.
Very interesting. So there's a very good, there's a very good chance that more than a chance that you're going to see an extension of the mine life, especially with higher iron ore prices.
Yes, absolutely.
And also, I mean, looking at you mentioned this earlier on, but obviously there's been a big uptick in overburden removal, over the first half of the year. And can you give us some background as to why that is and what's the purpose behind such a ramp up? I mean, my understanding is that it's to basically expose more of your resources for future extraction.
Yeah, absolutely. So basically, our mine is open cast mine. Right, open cast mine meaning that you have to remove a lot of overburden before you access to the ore. So in this case is that when we have the reserve, why it is important for us to have the reserve is because when you have the reserve, your mining engineer, it means that your mining engineer has done the necessary mine design, right? Then they will calculate the cost, what will be the cost that you're going to incur, and whether or not you will be able to extract the mineral with profitability, right? Profitably. So that is very important. And because of that, we will have this called stripping ratio or waste overall, right? So this will be the ones that actually being portrayed or forecast in the so-called financials in the reserve statements, because they need to show how is this mining schedule is going to look like. So yes, as a forecaster, we are expected to have a higher mining or waste removal activities during this period of time or the third year. So currently what we are doing is basically something that has been planned earlier on. So it's not something come as a surprise.
Right. And it's not at all related really to the iron ore price going up. It's more related to the planned, excavation in the open cast mine,
yes,
over a longer period of time.
Yes, correct. Because we will try to capitalize on higher oil price to be more aggressive in doing the work. That is why we have to plan nicely, because otherwise, right, usually when your overburden removal activity has been intensified, then chances are you'll be in deficit cash position. But in our case, we are actually making good use of this opportunity as well to be more aggressive. Yeah.
So actually, you're really benefiting from the higher iron ore price. So it means you can generate positive cash at a time when you're actually investing in future extraction under the longer term plan.
Yes, absolutely.
On the mine. And has that entailed sort of more overburden removal? Presumably means more equipment required. Have you had to invest more in sort of heavy equipment to push through this removal?
Yes, definitely. Equipment is always the key to our production, right? So if you were to refer back to our announcement, we have actually fully utilized the portions of our IPO proceeds allocated for the capex. Right, so we actually invest very heavily into the equipment, because on one hand is that you need to replace the old machine, and at the same time is we are going to increase the capacity, and also because with the newer machines, then naturally that it will be more efficient.
Right. And has there, just out of interest, has there been any difficulty in acquiring, sufficient equipment, or is orders long enough in advance that's not been an issue?
It shouldn't be a problem, because we have a very good mix of equipments available offered in the market. So I would say they are readily available, since we shouldn't have any issues in getting new equipment.
Right, very interesting. You might want to talk a little bit about some of the areas which are under excavation while we're talking about the mine, and which of those do you see as being most promising in the iron ore explorations you're doing?
Okay, when it comes to the exploration, of course, we have to keep on invest in the exploration, because from there we are able to tell how much more that we can go, and how aggressive or how that we should design our mine pit. Because like currently, the southeast zones of our present mine pit, right, has been noticed to have a potentials of the mineralization, and there is extensions of the ore towards the southeast zone. So meaning to say that whatever work that we have done currently for the overburden removal at our southeast zone, in fact, it's not only to gain access to the existing ore body, but it will prepare us to access to the extensions to the ore body. So that is the important part for us to keep on investing in the explorations, so that will actually provide a return to the company in future. Otherwise, we won't be knowing that, oh, there will be extensions. Then you will say, okay, we should stop now, right? So it won't be. So that is also part of the very important process, that a business process that we have to undertake.
And how, I mean, are there any sort of barriers from a regulatory perspective to expanding the mine? I mean, is the area now which you have license for currently, is that sufficient for a very, very long period of time?
Yeah, it's still within our present mining lease area. So in fact, what we can say is our mining lease is more than 500 hectares, right? And but our mine peak is more just only talking about 50 over to 60 acres. So it's still very much within our area.
Yes, so the area involved is in your current mining is very small, you know, relative to the potential for, or the areas which you can explore under your current leasing. And you mentioned that the leases can be extended for 10 years. Could you just give a little bit of background on that, on the lease extension?
Sure. So in fact, the lease was actually renewed back in 2013, right, for a period of 25 years. So what happened was that there is a drawdown period, right? So now we are actually finishing the first drawdown period, and then there's still another balance of the so-called overdraft to be drawn down, right? So that is something that we are not really that concerned about, because this is the mine that is being producing, and we also comply with all the laws and regulations, and there is no reasons that we can't continue to do the mining.
Right. So I mean, basically, that suggests that extensions will be forthcoming whenever you need to extend, given it's a production.
In fact, there was a blanket approval earlier on. So what we are going to do is just to draw down from that approval. Yeah. Right. Because it's split into two portions.
Right. I understood. Yes, because when you look at the dates on the mines, and they finish, you know, not too distant future, but you're saying correct. That's nothing to be concerned about. It's a longer term life of mine, which investors should think about. Yeah,
sure. Because in fact, that is why we are talking about. It's important for you to have a reserve, because the mining engineer will study the licensing requirement as well. Right? If they are not comfortable that your lease will be able to be renewed, then they'll use the 2023 as a cut-off date that is end of your mine life. Right. So then you won't have the kind of reserve. So that is why it's important for us to have reserve, because the company will have to provide all the necessary supporting documents in order to convince the mining engineers and all the professionals that you are able to extract toward the end, until the end.
Right. I mean, it sounds to me that obviously, I don't know how many major iron ore players there are in Malaysia, but you know, it's obviously it's an industry which has quite high barriers to entry, I would say. Is it right to say that?
Yeah, absolutely. Because I think the biggest barrier would be capital, because explorations doesn't always yield a result, right? That you could have to you may have to abandon after some time, after you have incurred millions, right? So, and secondly is that you need to have the people, right? Competent people to actually support you. That's why again is that the quality of those works, right, will be reflected in your resources and reserves. So again, it goes back to the same thing. That is why Southern Alliance is so focused on the quality of our resources and reserve, and we keep on pumping money into doing those exploration and evaluation.
Right. So there's a lot of very high level of importance for the quality of that geological survey.
Yeah, absolutely.
So is that done by yourselves with your own engineers or geologists, or do you employ third parties to do that, just out of interest?
All right. So usually is that everything, when we say desktop study usually will be conducted by our own geologists. But as and when we discover some interesting area, naturally that we need to bring in more competent persons. And in this case, is that we will bring in the service from the third party who have the necessary experience and knowledge, and they should be able to sign off the resource statement as a competent person. So first thing, of course, we'll start with our own desktop study. Once we have identified, then we will bring in the professionals to assist us. Of course, those must be competent enough.
Right, very good. Before we move on to the use of iron ore, I wanted to talk about that maybe a bit later. Maybe we can talk a little bit about the gold exploration, because it looks like a very, very large area.
Yes, absolutely.
You have to explore, and you know, what are the dynamics behind that? Is that again, is that the surveying must, over such a big area, it must be relatively difficult, but I guess geologists can identify likely areas to pinpoint.
Yes, absolutely. So again, we go back to the research, the studies over the regional geological aspect. And through the study and also some literature that has been published, we have actually discovered that an area about 18,000 hectares in Tenggara or in the district of Mersing, right, which is situated in the east coast of Johor, meets that criteria, right? Because what happened was that back in 1987, right, the Geological Survey Department, or a former body of Mineral and Geoscience Department of Malaysia, has in fact delineated 45 km square area with a potential gold mineralization in Mersing area. And also back in 1992 and 1994, they have done some sampling covering, in fact, 4,900 km square. Right? All this information are actually in the public domain, and also, in fact, has been put in our circular in July 2021. And from there, they have actually eliminated 3 mineralization zones, right? Zone 1, Zone 2, Zone 3, and Zone 1 is where our targeted area is the one of the areas that having the most promising gold mineralization, and that is why it will be our duty now to do the detailed investigations and to come up with the necessary resource. From there, only then we can move to that step, is to carry out the gold mining.
Right. So the current time, there are no indications of any sort of gold reserves, apart from the obviously initial survey. But have you actually discovered gold in the area at all? Or?
Yeah. Okay. Of course. When we actually announced that we have gotten the approval to carry out the gold explorations, and how it begins is that it begins with the recce, right? We need to identify what will be the area of target. Usually in this case is that you just try to pan around the river, right? Because usually is from the rivers that it will tell you, okay, where is the gold likely come from? So from the panning, then of course you see something, then you keep on moving up to the upstream. So that actually is still ongoing process. So it looks pretty promising that we have to keep on continue with our exploration work.
So it really is the initial stage is actually panning the rivers and see if there are any gold deposits at all.
Yes.
And from that, then you will look to pinpoint where it's come from.
Yes. So only when, because unlike iron ore you can see the outcrop with your naked eye, but gold you can't see, right? Because we always measure in parts per million. So it is very, very little. You can't see with naked eye. So you have to carry out a systematic explorations way to really lock the area of potential. So in this case, this is where we are doing. So we can't just go in and simply do the drilling, because drilling process is one of the most expensive process. Yeah.
So the drilling would come in the next stage.
Yes. So how we do is that we will try to lock the area of interest. We will say that, okay, the gold likely come from this area, and from there we'll do more and more exercise, like for example doing trenching, right? We trench, and then the geologists will go down there and do their own study, take the sample, and from there, if the result actually suggests that our direction is correct, then we will proceed with the drilling. And of course, as I said before that, we might be doing some what we call geochemical or geophysics studies to further confirm that this is the correct area.
Right.
That is why, again, we have to invest heavily in the exploration.
Yeah, no, absolutely. No, I mean, it must be very exciting to have that potential.
Yeah, absolutely. We are also very excited.
Yeah, very good. And are there any sort of active gold mining operations in Johor generally, or will this be the only one?
No, this is the only one.
The only one. And how about elsewhere in Malaysia? Is it?
Yes. Okay. Malaysia, basically, we have a few well-known gold mine, right? Among them is the Penjong mine in Pahang, right? We have this in the Kuala Lumpur's route area is sitting on the what we call a center belt. So that is one. And of course, we also have another one in the eastern belt, which is in the state of Kelantan, right? So there also has been proven to have a gold. And in fact, our previous former holding co actually has carried out quite a fair bit of gold exploration in that area. And in fact, we discovered about 1 ton of gold, right? But it's just that from the various studies, it suggests that it may not be economical to mine. Again, that is why we have decided to, my former holding co actually decided to abort. So that is why it's important for us to do all the study and evaluation. Otherwise, then even though when we look at 1 ton is something very attractive, but you might end up losing money. Right? So there are a lot of studies that you have to undertake.
So the loss of money would just be too difficult to extract effectively.
Yes, correct. Because that is why when we tell there is 1 ton of so-called resource, right? Now, whether or not you can mine it out, so that is called we converting to reserve. So you have to study on the metallurgical aspect, especially when it comes to the gold. And also at the same time is that because it involves the usage of cyanide, a very poisonous chemical. So it's something very sensitive. So we have to balance, right? So, and this is the part that, like what you say, undocumented ESG step that miner have to undertake, right? So you have to take into consideration of various aspects before you decide to whether to proceed with the mining or you decided to abandon the area.
Yes, because I mean, Malaysia has a very rich sort of mining history. I mean, with tin mining and all this kind of stuff historically, but gold obviously is a very, very, very interesting at the current time with, potentially inflationary environment, and people will invest in gold for that reason as protection. But that's very interesting, and it's very interesting to learn a little bit more about the methodology as well, because I don't think everyone is aware necessarily of that. Possibly move on a little bit now to the use of your core product, iron ore. I mean, you mentioned the steel industry, which I guess is probably obvious to most people, but there's another major use which I think you've highlighted previously, which is for the oil and gas industry. It might be worth explaining that to the attendees on the call.
Yeah, in fact, we started this iron ore mining not meant for steel industry. We started back in 2008, and our product, because of the uniqueness, our product has a high specific gravity, right? Meaning it's heavy, and we have a low impurities, particularly sulfur. We don't have sulfur. So sulfur, when the moment it mixes with the water, it becomes acid sulfuric, right? So it is something that the industry doesn't want. So because of this uniqueness, right, then it is a highly demand by oil and gas industry. Okay, why? Basically, they are used to cook the pipe, subsea pipe. Okay, first thing is how it works is that the crushed iron ore, we call crushed iron ore, with the specific gravity of more than 4.1 or 4.3, as the case may be, then will be blended together with cement, right? And it will cook onto the subsea pipe. So with two main reasons, right? First thing is to make the pipe heavier because it needs to be sink into the seabed. And second thing is, of course, because when you're talking about steel pipe and water, corrosion. So it also prevents that. So that is why actually this product is so unique, and not all the steel, iron ore mine is capable of doing that. So in fact, we are the only one in Malaysia that producing this pipe coating material, and we actually use it to previously we said locally, and there are two main pipe coater in the world is Bridaro Shop and Wasco, right? And they actually based in Malaysia. So of course, there will be occasions that we have to export that as well, right? We export even to Indonesia, despite that Indonesia is well known to have quite abundant of iron ore, but they don't have that product that meet the specific requirement. And we also exported to Vietnam before. So that is how we began our iron ore mining in the Cha'ar mine. And when it comes to 2013, we actually diversified into to produce iron ore concentrate.
So, because I understand that the last year there's not been any sales for that purpose, but that's a very promising.
Right.
Sort of,
so yes, correct. Because it's unlike the steel mill, which is keep on continuing producing their steel product. For pipe coating, they are very much driven by the demand of a specific project. So despite that there was no sales, but we have received quite a lot of inquiries. So usually they will need to know, okay, what will be your capacity, whether or not you were able to provide or supply us from which period onward. So because it ties back to the oil and gas, right? And it ties back to the needs to invest in the new oil field or gas field. So everything is pretty much driven by that.
Yes, I mean, I imagine that, obviously with the oil price having moved higher, I mean, obviously it spiked a lot recently and come back down, but oil price looks to be on an upward trajectory, and I mean, countries like Malaysia, Indonesia, have the potential to move into new areas. So I would imagine that that will entail putting down pipelines that need your product.
Yes. So that is why we believe in the product itself that we have, right? Because it's so unique, right? Then we can even say without the demand from the pipe coating, we can actually use the same material because they are the high grade ore, right? So we can use it to produce Fe65 iron ore concentrate. So Fe65 is a premium product, right? There is a premium page to the Fe62 price. Right, so the rule of thumb is very simple. You look at Fe62 price, you divide by 62 times 65, you should get 65 price. But in this case, it doesn't. You have to add a premium.
Right.
So that gives us the flexibility in how to manage it. Okay, if there's no demand for pipe coating, then we use for the iron ore concentrate.
Because you're basically getting more iron ore out of the total material.
Yeah.
It's very more concentrated iron ore.
Yes, at this point in time, yes, we have more iron ore concentrate than the crushed iron ore.
Right. And just, I mean, is the production process for crushed iron ore very different?
Okay.
I mean, the crushed iron ore itself, you're selling that to someone else who's probably mixing it with cement, which goes around the pipe.
Yeah.
But is the extraction the same either way, or is there another process?
It's the same process, right? So if you're familiar with the granite, the rock quarry, right? It's pretty much the same. We have to blast, right? We blast to get the ore, and then we have to crush. We have to crush to certain size, all right? Then the moment we hit that size, it's end our process. We just sell that product to our customer, all right? So naturally, the cost involved is so much lower,
yes,
right? Because you just crush it just like a granite, right? So it's different from iron ore concentrate. So iron ore concentrate, you have to further grind it using the ball mill. So that is very costly and it's very high cost process. And because that involves what we call impurity removal process, meaning you want to concentrate them. So naturally that you won't get 100% of your input, right? If we were to put 100 tons of crushed iron ore into the ball mill, and to undergo the concentration process, you may get 50 ton or 60 ton. It depends, right? So meaning that you won't get 100%. Whereas for our pipe coating product, 100% go in, 100% go out, and that's for sales.
Very good. So the iron ore concentrate, to get to that stage, is there obviously there's additional cost involved in getting it to that stage. And how much more expensive is it? I mean, obviously you said it's, you can see the amount, but I mean, how much more expensive is it to produce iron ore concentrate and from the crushed iron ore? And what are the relative margins on each business? Can you reveal that, or is it?
Right. So of course we can't tell in absolute figures, but of course when you sell a product, right, with different processes at about a same price, naturally the product that undergo lesser process will have better margin.
Yeah. Okay.
And the NO concentrate is again it depends on what we call your head grade, meaning to say that the crushed iron ore, right? How many percent of irons can be found inside, right? So if you have 50%, meaning that okay, this is good, then you can able to recover more. But if say it's a 20%, then you will get lesser. So this will vary. That's why it's very important. Again, go back to the same fundamental. It's very important for you to understand your resource statement, right? You say that okay, you are reporting how many million tons of indicated resource at average of how many percent of iron ore, right? So then that will tell, because if, for example, if you report, like for us, we are reporting around 50%. So we know that from 50% to go up to 65% is a lot easier. Rather than 30%, you want to concentrate to 65%, that will be more challenging and will be more costly.
Yeah.
Right. So those will determine your production cost, and it may vary because it could be like this time you get a good head grade, and next time you're getting a lower head grade, because when we're reporting, we are averaging it out.
Averaging it all out, right? Yeah, very interesting. And yeah, I mean, you might want to talk about, because obviously, you know, with this process, there's waste. You know, I think you call it tailings.
Yes.
What happens to all that waste? So I'm sure, you know, from I guess there's an ESG angle to this as well. You know, what do you do with that waste?
All right. So generally is that the process will be the waste actually generated from the iron ore concentrate process, right? Iron ore concentrate basically is we remove the impurities or the minerals that we do not want. But this process is not 100% efficient. It means that there will be a portion of your iron content will follow the impurities and being discharged into what we call a tailing pond, right? So the tailing pond over a period of time, right, it will be full, right? You have to keep on maintaining, because otherwise it will overflow and cause environmental damage. So in our case is that when we maintain our tailing pond by excavating the tailing, this we call tailing, and we put at one side, right? And because it still contains iron content, right? And with the present high price regime, there will be some buyers, right, from China. They will be interested to buy that tailing, reprocess it to extract the iron ore and mix together with the high grade ore and to sell to the steel mill. So that actually becomes some, because in fact, maintaining and excavations of the tailing and put that aside, manage them, is part of our required process in maintenance work. But in this case, since someone is interested in buying, then of course, when we actually remove the tailing, right, we have a new place, we have additional capacity to store them. So, well, again, it's not only a cost to us, but it's a revenue.
Right.
So that makes us so different.
So you can actually make, you know, you can make money from the you know, from the effectively the waste product.
So yeah, because it's a zero cost to us, all the costs will go into your final product, right? So it's a zero cost.
Right. And you've done some interesting things on cost, I think. You know, you've moved your electricity sourcing to
national grid supply.
National grid, rather than using diesel generators and so on to generate electricity. Is that right?
Yes,
that
yes.
Must make quite a big difference.
It makes a lot of difference, because especially now with the diesel price has gone out, I can say a very high level. So that actually help us a lot. And again, is that it's cleaner to use the national grid power than to use the fuel power genset, because you will generate more carbon. So in a way, is another process that's or another part of activities that the company has undertaken to reduce the so-called carbon footprint.
Right, got you. But that's very interesting. Just to sort of move on to the next subject. I mean, we're getting to the end of the time, so you might want to give us a little bit of a reminder of the outlook, you know, for the coming year. You're obviously you're June year end, are you not? So
July, yeah.
Sorry, July year end. So what's the outlook for the coming year? And obviously, assuming iron ore prices stay relatively firm, which in a recovering global economy you'd think they probably will. What are your thoughts in terms of production and so on for the coming year? And are there any major capex requirements that you'd like to talk about?
So if the iron ore price still able to stay at this level, right? So naturally is that the company can still carry out so-called intensive overburden removal, because if we were to refer back against to our IQPR, the technical report during our IPO stage, right? It suggests that when you have a good price, then you are able to go deeper into your pit and get more reserve. So that will definitely going to help us. Of course, with the higher iron ore price as well, then they will give us more incentive to invest into capex, because we are going to intensively develop our southeast zone, because we already discovered something. So naturally, that is a natural business process that you will do. And of course, at the same time, we don't forget about our northwest zone area. That of course is a bit on the high side, but when the price is high, then it's something that you should actually use it to do your future developments to get to your future.
Right. But would you foresee that overburden removal will remain high in the coming sort of year or so, or do you think you're going to see that sort of tapering off and more extraction?
It may still, it will actually reduce, right? But now by having us shifting our focus to another area, that will allow us to easily access to the ore body. So it will actually change the stripping ratio, and that shows that by understanding our mine, our ore body better, then we are able to manage our cost better and also to increase our production. Right,
understood. Very good. Well, that's very interesting. We might just finish off with possibly a few comments on ESG. I mean, is there anything you'd like to kind of sort of put forward very briefly? We've got a couple of minutes on ESG, and because that's something which obviously investors are very focused on, quite rightly so in nowadays.
Sure. So basically, is the company expected to publish our first ESG before July, right? And of course, as mining is slightly different from other industry, right? So naturally, because when you do open cast, you are going to damage the environment. But like what we say is that is why again we are going to do continue with our exploration in any even green area, green field. We are going to invest heavily in the explorations to determine if the area is suitable for the mining. Because like what we mentioned earlier on, for the gold projects, we have decided to abandon even with 1 ton of gold, because it poses challenge to the environment and also, of course, the economic wise. So there is some things that we usually do, but just that we don't actually tell the world that this is part of the ESG. So of course, that when we convert things, our energy use to the national grid is part of our efforts to reduce the footprint as well. And of course, and at the same time, is that by keep on replenishing our old truck, right, with a newer truck, it will be energy more efficient. So there are some other steps that we actually do it. Not only say that naturally it's for economic purpose, but at the same time also if a field to recommend the ESG as well.
Very good. Well, I'm sure investors will be interested to read that once it's published. But well, thank you very much for the presentation, and the conversation has been very interesting. I've learned a lot myself, and it's all quite fascinating. And it sounds like there's a very exciting sort of outlook for the company. So I'm going to hand back over to Anisha, who will sort of give us some closing remarks. And yeah, thank you very much again.
Thank you, Angus, for those great questions, kind of teasing out quite a lot of the value at Southern Alliance. And thank you so much, Mr. Lim, for walking us through, all those challenges in the mining sector, as well as the opportunities that lie ahead for the company and all the ESG angles you're looking to address too. Appreciate your time also, Mr. Tan, for joining us here today. And I'd like to also thank our attendees who have who have attended live. And we look forward to having you for our next one. And with that, thank you all once again and have a great week ahead.
Thank you. Bye.